favorite measure of inflation by the Fed, personal consumption expenditures. The report was released last week. Hi, I'm Beata Bukowski with Fairway Independent Mortgage with our weekly economic update. That favorite measure of the Fed showed an increase in prices at 0.3%. So the inflation rose 0.3% in August, which was higher than expectation. When we take out the most volatile energy and food prices out of that number, it rose 0.6%, rising from 4.7 to 4.9. On that note, the Fed said that they're going to stop tightening, meaning increasing the Fed fund rate, once they get to a target rate of about 2% on that core inflation. So, bottom line here is this. It is a 12-month rolling average. Inflationary numbers in the beginning of last year looked different than they did in the end of the year. So now, with August dropped off from 2021, September inflationary numbers last year were already showing increases. So now this number should be slightly better going forward. And that gives us a glimpse of hope that mortgage interest rates are also going to stabilize once we get closer to the Fed's target. Signed contracts on existing homes were down 2%, right in line with expectations. Sales were 24.2% lower than last year's August, which also is very explainable. Bottom line is, Lawrence Yun of the National Association of Realtors says that if mortgage interest rates stabilize, not even drop, but stabilize a bit, buyers are going to be back again flooding the market. On the new home sales, however, a huge positive surprise. 29% increase in sales from July to August. Buyers did flood the new construction market only because there is less homes on the existing resale market available. Important to note that there is about 8.1 months of homes as far as the supply on the new construction front. However, only 10.6% are actually ready for occupancy. They're completed. The rest of them are under construction. Case-Shiller Home Price Index, the gold standard for price appreciation, fell 0.3% in July, but sales still show 15.8% higher on an annual year-over-year reading. That's all I had for you today. Please stay tuned for next week's updates.